So is this the big great reset? Or is this just another day in the office? That's for you to decide. How does cryptocurrency play into the Great Reset? Have you been paying attention to what's going on? What the government's saying? What the Fed is saying, which is more important? Or are you just sitting there counting your coins? I don't care if they're Bitcoins or dimes like this one, but you need to pay attention because the Great Reset is probably already here. This is what now? What's next? And I'm Chris Naugle. Let's talk about your coins and how they play into the Great Reset. All right, folks, it's time to get serious and it's time to get to work because did you hear what the Fed just said in their last meeting? Did you pay attention? Where are interest rates right now? They're really low, aren't they? And they're really low, and you know this because you probably refinanced your house. You probably took a home equity line. You probably bought a car, used your credit cards, everything else. It's all credit. And credit is controlled by the Fed, the central banks. Where are interest rates? They're almost zero. Some people don't quite understand why the Fed dropped interest rates. Well, when the pandemic hit and the whole market tanked, the Fed had to stimulate the market. It was a great excuse to print a whole bunch of money to devalue the dollar.
That doesn't sound good.
Well, let me tell you why they do this. So in dropping the interest rates, that gave everybody the excuse to go out and spend more money, which then hockey sticked everything. Do you remember what happened when the pandemic hit and everybody was locked down and companies were shut down and the markets were free falling and everybody thought, oh my God, the world's ending. Didn't end, did it? Nope. It quickly rebounded and it created this nice little hockey stick. You guys ever see a hockey stick? You know, the end of the stick kind of does this. Well, that's exactly what the markets did. That's what your stocks are doing. That's what your real estate did. It's all one giant hockey stick.
Like the sound of that.
But nobody really pays attention as to why.
Oh, it's the demand. There's so many people that want to buy my house.
But why is there so much demand? It's because cheap money drives demand. When the Fed dropped interest rates, it stimulated the economy. It stimulated you spending money. It gave birth to a whole new reset. But this wasn't the Great Reset. This was just the start. And in doing that, the Fed did another thing. What did they do? They printed trillions of dollars. How much? Well, no one will ever really know, but about $5 trillion were printed.
How is that possible?
Who printed that money? The central banks, the Fed. And then how did that money get back in your hands in the form of stimulus checks, PPP, EDIL? Well, the government, the US government that is, exchanged paper called IOUs, commonly known as treasury bills and bonds, to the central bank. And the central bank then gave them cash, printed money, this stuff. It's worthless, really, it's fiat money. But they said, okay, in exchange for the debt, here's the money. And they gave the government the money. And what did the government do with the money? He said,
here's a little for you, here's a little for you. The pharmaceutical companies get a couple billion. Here's a big stack for the banks.
Everybody got their little piece. All that money exchange and that debt that was created drove the economy to where it's at today. So how does Bitcoin fit into all this? How does Ethereum and all those crypto coins play into this whole thing? Well, were any of you trading Bitcoin or buying Bitcoin or any of the cryptos? Because those also hockey stick, didn't they? They went up, up, and away. Why? Because as the government printed money, what happened to all those dollars that you work and exchange your time for? They got weaker and weaker and weaker and weaker, just like they have all the way back since the Fed was created. 1913, you guys should study history a little bit. In 1913, the Fed was created what else was created? The tax code. The tax code and the Fed were created to do two things. Well, the Fed was designed to print money and control the supply and the rates. There's a lot more to it, but let's keep this simple. And in doing that, when they print money, the dollars that you have, this $100, decreases in value. And how does that happen? It's called inflation. See, you all think that inflation means that milk and crackers and cookies and pizza and gas all just goes up in price. No, no, no. You see, that's only a small piece of the equation. Really, what's happening is inflation is a hidden tax.
No shit, that's interesting.
Inflation is a way for the government to ruin the value of your money, to steal your money by devaluing the dollar. Now, why would the government want your dollars to be worth less? Well, it's very simple to understand. Let's just assume that you owe $10,000 to Visa, and Visa's charging you 29%. What if Visa went to you and said, listen, you owe us $10,000, but if right now you pay us $5,000, we're good. Would you not find $5,000 to pay them? You would. So what does the government do? By the government devaluing your dollars, the government gets to pay back all of its debt at a lower value. Doesn't that make sense? Because all of us want to pay our debts back at half or 25% of its current value, so that's what printing money does. Devalues the dollar and allows them to pay it back. But let's come back to Bitcoin. And in doing all this, when the dollar is going down in value, people don't want dollars. They want to find something more valuable, something like Bitcoin, the new dollar, the new money, or whatever you want to call it. It's just a store of value. People find value in what Bitcoin does because it's a finite amount of it. It has the potential to be money, which is nothing more than a means of exchange. And because of that, investor confidence drove the price up, and away. How high? Well, it got into the mid $60,000 range. Actually, I think it was the high $60,000 range. And then all of a sudden, poof, just recently, it free fell. Down, down, down. Let me ask you, were you buying when it was 40, 50, 60,000 because it felt good? Because FOMO kicked in?
Oh my God, I'm missing out. It's gonna go to 120. It's going to the moon.
Or were you being cautious and selling? Because I'll tell you, I sold. I bought at the lower prices and I sold when it got higher. And I just kept doing this over and over again. But recently, when it fell down to 28,000, I started buying a whole bunch. And all of you should have been buying a whole bunch because you know what? Bitcoin and Ethereum and all the other coins dropped significantly in value. And now they're on the way back up. So when we talk about the Great Reset, is Bitcoin the almighty? Is Ethereum the almighty? Is crypto where your money should be? Well, if you understand it, you understand the problem it solves, but you also understand the risks it holds. It's a very volatile asset class, driven solely by investor confidence with no fundamental and no intrinsic value. So when you talk to investors like Warren Buffett or guys that trade on fundamentals, they say no way to cryptocurrencies. They say no way to Bitcoin, no way to Ethereum. There is no intrinsic value, so we have no idea how to determine what the value in the future will be, except for somebody speculating, saying it's going to the moon. So when you buy Bitcoin and Ethereum, what are you really buying? Are you buying currency? Are you buying a store of value? Are you buying money? Well, you are not buying money because money is a means of exchange. And as of right now, in most countries, money is what they print. It is the only legal tender. In the US, it's these greenbacks. This is the only legal tender that we can exchange. But you see, Bitcoin, you can't. Now, I know early on, Elon Musk said, hey, we will accept Bitcoin as a form of payment for Teslas. Then he, for some reason, said, oh, Bitcoin's bad for the environment. We're no longer going to accept Bitcoin to pay for your Tesla. You see, that is not a good means of exchange. One day you can buy a Tesla, the next day you cannot. And one day Bitcoin is at $60-some thousand, and the next day it's at 28,000. Is that how you want your currency to react? No. You want your currency to be stable. Bitcoin or cryptocurrencies are not bad yet. But what's next? What might happen? Well, if you talk about Davos and the Great Reset and you look at everything happening and you really take a look at what's happening to China.
China
China banned mining. So you can't mine for Bitcoin or Ethereum in China. They put the stop to it. I know people from China and they had big mining operations that just got shut down. So they brought all that over here to the US. But now what's happening in the US? Well, they're talking about an executive order. What does this executive order mean? And is that already built into the price of Bitcoin and Ethereum today? Well, I don't know. But it is definitely something to look at because it could drop the price back down again. See, right now we're fighting to get over this $38,000 level, and it's a strong level. We may hit that and just bounce right back down to 28, or we might run through it. It's anyone's ballgame because it's all based on investor confidence. And if the executive orders come out and they're saying it's going to be February 2022, they're going to announce this, we have to sit back and decide, is it going to drive Bitcoin up because there's a finite amount, or is it going to drive it back down? The best way to invest in any of these is the same way that you should be investing in any type of a stock, a mutual fund, an ETF, and that's called dollar cost averaging. Depending on where you buy your cryptocurrency, you should be setting it up so that every single week or bi-weekly or monthly, you're buying a little bit. Like I do it, and I take $100 every single week and I put it into Bitcoin, and I take $100 every single week and I put it into Ethereum. No matter where the price is at, I'm always buying. And then when the price drops, like it just did, I take big chunks of cash, and then I take these big chunks and I say, ooh, I'm gonna buy a big chunk of Ethereum, I'm gonna buy a big chunk of Bitcoin. Now you'll notice I'm not talking about the shit coins. Not talking about those coins that are 0.00000018 to buy. And all of you think, oh my God, I can own twice as many or 100x or 1,000x of those versus buying like a fractional share of Bitcoin. You think that more is better because you have bought into FOMO, the fear of missing out. You think that that coin, if it just goes up 1 cent, you're gonna be a millionaire. But 1 cent up is the same as 1 cent down, and 1 cent down means you're broke as shit.
I'm broke as a joke.
So do you want to play that game? You shouldn't, because the mathematics are the same. If you buy a fractional share of Bitcoin, okay, even though you own a minute, tiny little amount of one coin, and then you go out and you buy millions of shares of a shit coin, and you think just because you have more, you're going to make more money. That is not it. The math is the same. Depending on the way that they move, doesn't matter how many shares you own, you make the same percentage. You just think that because of speculating and because of your confidence that that shitcoin is going to make you a multimillionaire, and maybe it will, or maybe you'll go broke. So when we talk about the Great Reset, you really need to get ready for it because it's coming. And one final thing to tell you that it's coming is the Fed minutes. Not only did they say they're going to raise interest rates, we already talked about that, but they also said they're going to do what? They're going to taper the bond purchases. You see, the government has been selling bonds to the Fed at a crazy amount, billions and billions of dollars a month, tens of billions for that matter, and they're going to start tapering that back. They're going to start slowing that down, which what that's going to mean is all this liquidity that we see, all these riches that you see in the markets, everybody's got access to lots of money. That's going to start to diminish. Then what the Fed will start to do is sell their bonds in the open markets, and that will suck, literally suck the liquidity out of the markets, making it so that you can't get easy money. And it will also be paired up with rising interest rates, making it more expensive for you to go out and do the things you're doing today. And then eventually it will stop. The economy will flip. We will go into deleveraging. Eventually inflation will give way to deflation, and boom, we are into the next cycle, and you won't like that one. So how does Bitcoin play into that? It might be a good position to have, but I wouldn't go all in on it just yet. So folks, I hope you enjoyed this. I hope some of these points were valuable to you. Although I didn't tell you that Bitcoin's the greatest thing or not so good at all, I certainly told you how you should play this game, and you should play it the same way you always should be playing it. Buy low, sell high, and don't lose money. Folks, if you like this episode, make sure you check that one out because you'll certainly like that. And if you want more of this, subscribe to this channel. Don't worry, I'll wait. I'm waiting. Just click the button. Yep, it's right there. It says subscribe. Just hit that button. Okay, all right, good. Thank you for doing that. Now click the little bell up above so that you are notified every time we put out one of these new videos, and we'll see you on the next one. This is What Now? What's Next?